Hello, YouTube. We're streaming out to Facebook. We're good on Facebook. Hello, Facebook. We're good. Ladies and gentlemen, pre-earnings analysis on Shopify and my Apple thoughts after earnings. I am Mark Melnick. This is the Newsbeat Show. Good evening, ladies and gentlemen. Welcome to the Newsbeat Show. So many great things to talk about here today. We're going to start off by giving you Shopify analysis and how is the T3 Live Newsbeat challenge coming along? How you could have performed today. What we did was, if you don't know what the challenge was, last past Sunday right now, we gave you four names, one every day for Tuesday, Wednesday, Thursday, and Friday. Four names to trade today. See how we're faring so far? My goal was to be 75 to 100% right, meaning that I would hit at least three out of the four names. So far, we're one for one, and we're going to show you exactly how that went. But by watching this video, you are agreeing to hold me, Mark Melnick, and T3 Live harmless, not responsible for anything shown, said, portrayed on this video. If you don't agree to that, exit this video. And if you do agree to that, don't do anything and enjoy the show because we're going to get right into Shopify. Anyone want to take a guess right now how big Shopify is in terms of what number in the world are they considered for an online retailer? I mean, you must figure like Amazon. Okay, Amazon is first, and where do you think Shopify is in the world? Just out of curiosity, because we're going to talk about their earnings. They are reporting August 1st. Very. No, Jimmy got it. Ken is like 17th. Jimmy third. Very good. Shopify is the third largest online retailer, which you probably never have gone to. How many people have never been to Shopify, .com? And we're going to even go through we're going to go through the numbers and then we're going to show you exactly what they did as well as my thoughts. So to start off, um, everybody knows the stories of mom and pop shops. Everybody knows their story, how they've been struggling thanks to the addition of companies like Amazon. Honestly, the way I personally see it is nobody likes to see anybody get hurt ever. I mean, we only do good things. We do so much charitable work here, so many blessings, so many mitzvahs for people out there. But, when somebody loses a job, unfortunately, the market environment isn't as loving and as caring. Basically, things just get phased out. Like, for example, you can't go to the local blacksmith right near you and repair your armor or repair your sword or repair your weaponry or sharpen things. You can't. There is no store that really does that in mass quantity. I'm sure they have one of those stores left as a more of a historical reason. But everybody knows that the mom and pop shops have been suffering thanks to the addition of companies like Shopify. What Shopify is literally doing is they're taking these small and medium-sized businesses and they're literally giving them a space to market themselves online. It is a very big blessing for those who have been negatively affected by companies like Amazon, like eBay, etc., etc. So what I want to do, and Shopify's, I just want to take you back to their last earnings on April 30th. We're going to take you right over here. In the morning, they opened up basically 60 cents higher and rallied $21. So this is what happened on Shopify. They announced this morning they didn't even gap up that much. I mean, they gapped up like 60 cents, 70 cents. And then they just popped up higher and exploded. This is the daily of it jumping 21 points in one day off of earnings. So it's definitely one of the more volatile names on a day like will be like on a day like August 1st for sure. Let's talk about those numbers, shall we? Let's talk about what they did back then. Let's talk about where they could potentially be today. Q1, they for that quarter on April 30th, which they pushed up $21 higher, 9-cent profit adjusted per share versus the loss of 5 cents per share. 320.5 million. That was ahead of the 300 and almost 10 million, a little less than 310 million expected. That's a pretty big revenue beat for an online company. Every analyst came out and raised it at the time. Baird, Roth Capital, Piper Jaffray, Canaccord, KeyBank, SunTrust, Wedbush, Wells Fargo, Credit Suisse, all analysts that raised their targets to Shopify, basically near the 270 to $275 zone. Maybe that's where most of the estimates. That would be, what's it called? The median would be close to in the 270s, meaning like the center price, because most of the analysts were on the higher end of that price. So, uh, look, this company is going to absolutely kill it. And it took you to just read the Barron's article. The Barron's, does anybody remember the Shopify Barron's article? And of course, that came out on July 5th, right over here, saying Amazon isn't a monopoly yet. Just look at the stunning growth of Shopify. And I want to talk just a little bit about the article here and a little bit of what they're basically saying. So everybody, talks that big tech has grown too dominant. They see Amazon.com as having all but won the internet game. Squashing every competition, buying out companies they need, and basically leaving little hope for you. If you wanted to go in and start your own Amazon.com sort of thing, you are so late to the party, it's almost impossible to succeed. You would need like such a user base to start, and you'd have to grow massively. Now, let me remind you how history works. Over time, the largest companies, when they look unstoppable, are at the greatest risk of disruption. Look at Apple breaking into desktop computers, Windows. Look how Amazon broke through. The e-commerce world is already pushing back on the entire narrative that Shopify is that Amazon is basically going to be indestructible. Everybody is pushing back with full force. Shopify is one of those companies. Now, you might, there are people out there who are like, wow, it's already trading so high though. It's a $300 stock. And if I show you the monthly, yeah, this stock has come a long way to where it is. Without a doubt, this stock is phenomenally strong. And yeah, it could have definitely volatility. You see all these green monthly bars. Everybody thinks a pull-in is due. Maybe. But I have no doubt that Shopify is going to come in and crush it on the revenue side. I know they gave. Now, here's the interesting part. When they actually reported those earnings, they pretty much said they were going to be in the middle of the range. I'll just take you right to the number. They pretty much said revenue for the full year is going to be 1.48 to 1.5 billion, and the consensus was 1.49. So they basically like it's directly in the middle. It's basically like here's the consensus. This is where they beat. This is where they miss, and it's like equidistant from each other. And that was sort of an interesting thing to say because people are thinking to themselves, if their revenue is growing, why do they think there's going to be a slowdown in the year? And I think that sort of caught people off guard. And the COO said on CNBC on April 30th, saying we are a retail operating system. And I found that to be very interesting to call yourself a retail operating system because what you're basically trying to say is you're trying to already say what Amazon is. Amazon's really retail. I mean, sure, they make their own product, but they didn't start that way. Yeah, they make Alexa and other things, but most of Amazon is them selling other people's retail products. That's exactly what it is. And I wanted to just take you to Shopify.com just to show you a little of what it is. It's not the flashiest website. This is a $35 billion company, though. I do want to point that out. So, yeah, this company does a lot of business, and you could start your business branding. Most people come in and they think to themselves like how do I buy things here? Like you might be looking at it saying, how do I buy things? Well, you don't really buy things. You sort of just start your business online. It basically turns every single person out there into an online retailer. You want to sit your butt in front of your computer and sell products online. That I know people who are making seven figures a year doing that. They literally know a bunch of these Chinese factories. They ship over their goods here and they sell it on Amazon, for example. Shopify Shopify tries to set this whole marketing thing up for you. It almost turns you into a mini Amazon of your own goods. And I really mean a mini, mini, depending on where you start, right? And this is how Shopify, this is how they get paid. And they have 29 a month, 79 a month, 299 a month advanced features for starting your business. They talk about SSL certification, abandoned cart recovery, gift cards, professional reports. They basically offer you all the things that if you had to sit there and hire somebody to do every one of these things for you, you'd be basically running probably $1 million company in terms of salaries you have to pay out. What they do is they try to simplify it and make it as basic and as cheap as possible. And for the serious businesses out there, $300 a month is huge. I want you to think of this pricing model like this. And this is how I want you to think of their pricing model. Anybody can come to them and start their online business without needing to raise money. Whatever product, it could be a service, it could be whatever it is that you are physically selling, whatever it costs you. You really have somebody who's going to basically show you how to scale your own business higher by putting your product out there. People with ideas, and you ever see those websites like, oh, I was selling how to knit sweaters for grandmothers out there. And I just went to Wix.com and I was able to start my website. And as foolish as I look, here we are today. I mean, remember that commercial? A website builder that's supposed to be easy. Think about that. A website builder that's supposed to be easy. What do you think Wix.com is worth without looking? Right over here. What do you think this company should be worth? GoDaddy lets you do it. How many websites give you templates to build your site with? Ah, big blue button. Get started. Let's see. Time to sign up. Okay. Point being, this is a $7.3 billion company. That's a $7.3 billion company. And to show you what the Wix chart looks like, here's a monthly chart of Wix. So yes, this stock basically went from $14 to 155 in a matter of three, a little over 3 years. This is a monthly chart. Here's Shopify's monthly chart. Shopify, in the course of those, in 2.5 years, to 17 to 18, no, 3.5 years, went from $18 to 338 $340. What you're realizing, what they're capitalizing on the same group of people, Wix and Shopify. Shopify just has a different business model. It's the same mentality. Make it easy for everybody to get off the ground. And for the majority of people who aren't Generation X, for the majority of those people who are not, who are baby boomers and things like that, I'll tell you right now, they're going to look at this site and they're going to fall in love. I don't care what it is. I don't care if you knit sweaters. I don't care if you import your own product. I don't care if you're one of those as seen on TV products. There's no reason for you to not be on Shopify. It literally is one of the only services out there that grows your business and has a monetary incentive to grow your business without taking a piece of your business. And I know that sounds a little crazy because they're not like angel investors where they're asking for a large portion of your company in order to throw money at it. This is no angel investor group. This is basically, okay, you want in? Pay us. Now keep in mind, Netflix is getting what right now? I think they get the lowest end from, was it $12 a month for me? I think some people pay as much as 15 or 16 now. Whatever it is, $16 a month. For serious businesses, these guys can collect $300 a month. Now, I am not even going to pretend that there are 10 people who want to pay this fee for Shopify. I'm not going to pretend that there's 20 people who subscribe to Netflix. For every 20 people who subscribe to Netflix, that one of them might actually go for something like this just to show you the monetary balance, just making a comparison to Netflix. But what this basically does is it's going to cut out the middleman from Amazon business. Amazon has a business like sell your products on Amazon. And I don't remember the exact name. I think it's called an Amazon business account. And you could literally open it up, and Amazon will warehouse your goods, distribute it to where it's needed, and charge you a fee and take a percentage of the sales. What this company does is it will help build your business and get it and help your e-commerce business and get it out there while completely cutting Amazon out. You pay for it, of course, but they are between, like, here's Amazon, here's the buyer, and here's the people in Amazon business, and they pay Amazon to get to the person who wants to buy their product. Shopify is basically saying, wait a moment, you don't need Amazon to boost your business. We got you. We're going to give you everything you need to start your own business without using Amazon, without paying them. And if you're, I mean, I don't know what is, does anybody know the Amazon Business Services, Amazon Business Services, what is the fee they charge? What is the fee they charge to sell? What do you pay to sell? Does anybody in the room ever sell anything on Amazon? Write in the comment if you know. But let's put it this way. If somebody is selling hundreds and hundreds of thousands of dollars of worth of goods, this is going to look cheap. That is going to look, it's about 15% of the sale, Rito. 15% fee of the sale. I mean, are you guys, let's look it up. Let's look it up. How much does Amazon charge to sell when you sell something? Yep, right over here. The average seller is paying 15% and a monthly fee, and 6% to 20% of the product selling price with the average of 15. Okay? Just right off Google. 15%. Let me give you an example. I'm going to give you an easy example. You start a new online business, you're pushing it, you're really good at it. You make $40,000 in your first year. It's new, you're pushing it out there, it's growing. You take $40,000 and you multiply it by 15%, that costs you $6,000. That makes this look cheap. That makes this look cheaper, and that looks this make cheapest. It costs money to do business. Amazon doesn't really promote you either. I mean, they have their people who pay extra money, but this company actually does it for you. Manual order creation, discount codes, free SSL certificate, gift cards, professional reports, advanced report builder, third-party calculated shipping rates, competitive shipping rates, a shipping discount of up to 74%. They just took what Amazon does. You know, remember the big dispute between Amazon and the U.S. Postal Service, that the U.S. Postal Service loses money by having Amazon as a client? Do you guys remember that? Remember all that talk and debate? Was that from last year or whatever? And that was on the news headlines. Guess what? They can save you up to 74% shipping. They basically took the charge. Now, yes, I know Amazon Prime, you pay a monthly fee. I get it. You're paying a monthly fee on Amazon to be part of Amazon Prime. This company is Do you offer discounted plans? Can I change my plan later? Can I cancel my account? Do I need to enter my credit card details to sign up? No, you could sign up for 14 days without entering it. Is Shopify PCI compliant? Blah, 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 blah. Free 14-day trial. If Amazon is smart, they're going to come out and they're going to buy out this company. They're going to come out and they're going to buy out this company. Simply put, because they don't need someone like this screwing with them. They just simply don't need it. Now, do I think this is a good acquisition for Amazon? No. But somebody who wants to compete with Amazon and take this stock to the next level, let me ask you a question. What on earth makes you think that Facebook wouldn't want to buy them out? You could come out on Shopify, you could offer $500-$600 a share, 70 billion, and this company disappears the next day. And the reason for that is, why doesn't Facebook sell things? They also have a network that's larger than Amazon's. How many people use Facebook a day? How many billions sign in a day? Billions of human beings? How many billions of people are there a month? They can have their own online retailer. There's no reason why Facebook doesn't break into that. They can even offer services where they offer discounted rates to people in their friends list. So they feel like they're doing people favors and they're getting a inside, deal. It's true. I mean, they could just go down this direction. And if you think that Facebook shouldn't go down this direction, they're already going down the cryptocurrency direction. Did you ever think Facebook would be a cryptocurrency company backed by real estate and maybe government treasuries to have an actual asset back based crypto coin? This is why I said Facebook was going to go to $1 trillion if they're able to get that off the ground. That's $1 trillion idea. Now, I know $1 trillion sounds a lot to you guys these days, but let me remind you that 100 billion was huge 20 years ago. 50 billion. Wow. 50 billion? What do you think happens 20 years from now? You're going to see $20 trillion companies. You're going to be like, Mark, you're crazy, man. 20 years from now, $20 trillion companies? No way, man. Do you think the market is going to stop going up because you're alive or not alive? Or stock market, as long as humans exist, money is not going to deflate. How many people are afraid that their money is deflating in value? So they just sell all their things and hoard cash under the bed. How many people do that? There is no reason for Amazon to lose business to Shopify, and this company shouldn't be taken over by Amazon because Amazon has no need for it. Amazon doesn't need to cut out their own middleman. But if Facebook wanted to get preferential shipping, preferential deals, I'm sure they can start offering free shipping, go down the same route that Amazon is going down, and actually start letting random people on Facebook sell their goods and create their own stores through Facebook, a trusted name and brand which people spend the majority of their time. So Facebook, people on Facebook, instead of saying, "Oh, I wonder who this person I haven't seen in 5 years. I wonder where they're eating," and "Oh, what beautiful kids," and you're sitting there, and before you know it, 5 hours pass, and you're like, "What the heck have I been doing? I'm hungry. I need to eat. I use the bathroom. What have I been doing on this phone?" And they take over a Shopify, and they give everybody on Facebook the chance to be their own businessman. Wait till they start saying support my business. Send me money if you want to send me $50 worth of Libra, fractions of a Libra potentially, or 20 Libra. Send me 20 Libra to sponsor my business. Looking for help from my friends. Are you kidding me? Are you can I know you guys are watching like, please, Mark, I hope this exists because I will do that. I have so many friends on Facebook. I know that's what you're saying. I think the earnings are going to be phenomenal. Now let's talk about just real quick. I came to you with one name. I came to you with a list that looks like this. All right. So here was simple T3 live Newsbeat challenge. I put this out on Sunday. You could watch the video. It's the Newsbeat show from July 28th, and we said trade Procter and Gamble, make 25 cents or more using the Mark 5 strategy. We asked you that, and I thought I was going to be right 3 out of 4 or 4 out of 4. Here was the Mark 5 today in Procter and Gamble. High was 120.84, high was 120.95. Stock drops. High of this candle is 120. Based on Procter and Gamble's gap, based on the earnings, based on everything, this was a proper setup on a Mark 5 strategy. Bought through 120, and right over here on one tick of the candle, it's just one 5-minute candle, 5 whole minutes of your life. The stock went from 120 to 120.43, easily hitting the target of 25 cents. Also, we held a runner and put a target of day highs. And the stock went to 121.58 on consecutive 5-minute green candles. That was the name we gave you on Sunday. We gave you the name and the strategy. Are you being scammed? Are you playing those carnival games where somebody thinks that you can actually manage 5, 4, 6, 8, 10, 12, 15, 20 stocks at a given time? You know, most traders are uncomfortable managing more than one position. Traders have their breaking points where the market is managing them and they stop managing their positions. Put in the comment section, what is the maximum number of positions you are comfortable with? For me and you, every trader trades best with one position on in terms of managing that position. Beyond that, you're managing additional things. It's very simple. Jimmy, 2 or 3, 1 or 2, Richard. How about you, Randall? 4 trades, you're fine. 1 Arcady, 1 Conrad, 1 Thomas, Don 1, Rich 1. Trying to get back to 2. 1 to 2, Greg, Charlie, 3 to 4, Mark 1. You have 16 positions on. So let me actually ask you, Duane 1, Jack 1, Brian 1 to 2, Johnny 3 max, but I can only watch 1. Randall responded, I have 16 positions. Robert G 1 to 2, Brian 1 to 2, Paul 1 to 2, Mary M 2 max. Mary M, I respect that. So Randall, this is 16. That's a fund manager, Johnny, right? Okay. Now, I'm not saying it shouldn't or should be done. All I am saying is, how does that make you feel? Does it feel like your positions control you and you're just praying that they remain overall up at this point? Like, is that what it really comes? You took the positions before you came here. I get it. I respect where you're coming from. I'm not saying that we were responsible for it. I'm just saying, like, to help other people out there, how does that make you feel? So, join us tomorrow in the Newsbeat room as we are going to be trading AMD based on the Mark 5 strategy, long or short. We'll call it out in real time before it happens, just as we did today. And see, the Newsbeat challenge is basically to try to keep people consistent. There are people saying they made $5,000 today on that move in Procter & Gamble. Do not underestimate what trading the market's biggest names can do for your P&L. You don't even need a lot of money to trade them when you go through options. People are trading these with $500 to $1,000 accounts. It's not that serious. People are trading it with multi-million dollar accounts. It's not that serious. So join us tomorrow where we trade AMD. And I just want to go over Apple real quick. Just real quick. I just post earnings now. And I just wanted to talk a little about it. 218 beats the 210 expected. 53.8 billion beats the 53.3 billion expected. They see Q4 revenue 61 to 64 billion. That's ahead of this consensus 61 billion. Their iPhone revenue was 25.99 billion versus the 29.47 billion last year. They basically sold $3.47 billion less worth of iPhones this year compared to last year the same time. Their Mac revenue went up though 5.82 billion from 5.26 billion. And basically they're saying that people are going crazy. There's tremendous demand for their AirPods. And they're selling a lot of their AirPods. They say they're happy with the results across the board, return to growth in China. Okay, everything looked very positive. They say their iPhone revenue was up sequentially in 15 to 20 markets, basically insinuating that they could get their iPhone revenue back on track if they're selling more phones. At the moment as we speak right now, Apple up to $218.13. The interesting thing is Apple is one of the names that have not enjoyed its all-time high since last October. And just taking a look at the daily here, um, it's just really blasting off through the year highs already. The trigger breakout level I'm going to watch is in target is $222.36. I think this has at least another 4 points in it to the upside. We'll be watching it to trade tomorrow. Do you want to see us trade it tomorrow? You could be part of the T3 Live Newsbeat challenge. So far, we're 1 for 1. Are we going to go 0 for 3? Are we going to go 3 for 3? You could find out in real time and see if these strategies are right for you. We also, just real quick, we bought I guess since people have the most controversial price target out there and beyond, I figured I'd comment on it today. We were buying right here through 190.49. Right over here, we were buying Beyond Meat today. 15 minutes, it went up 9 points. If you sat there for another hour and a half, it went up another 17 points. The stock went up overall from where we bought it, $26 and change. We were buying right over there on this candle, right over here, right over there, right near the bottom of that bar. Pop goes the weasel, and it ran. And then we said it's going to go to 200. It went to 200, digested, and then even took off more. Kind of sick, right? Well, trading really is easy. It really can be as easy as me literally giving you the name last Sunday, showing you the strategy I'm going to trade upon it, calling out that I'm watching to do the trade in real time, executing upon the trade in real time, and selling the trade in real time and making money every step in between. Really, trading isn't difficult. It's you, the trader, who makes trading difficult. And I hope to prove and enlighten you into the next Newsbeat success story. Happy trading, make money. I'll see you guys tomorrow morning on the Newsbeat live trading broadcast. Have a wonderful evening.